What's up? So today we're going to be doing a quick little trade recap as well as some further market analysis from before the trade and coming into the rest of the week here. So to start off, here is the trade that we took, zooming into NQ a little bit here. This was during the 1050 macro. Based off this indicator here, you can see where the macro expanded, price accumulated higher, and obviously on the day or the daily profile, we were pretty bullish. So we had SMT between London and Asian session, but we had a London reversal. So I was expecting New York session to expand higher, so bullish on the day. However, you notice I did take shorts, and that is because with our expansion or our accumulation macro here, I was expecting price to want to come down and take out this these macro lows, as well as reach into this sort of equilibrium fair value gap here. So we had this 3-minute fair value gap. I think there's also a 15-minute. Yeah, here we go. This 15-minute fair value gap, which lined up with the 3-minute basically. And if you look at in terms of our currently dealing range, that's right into a small discount. So it's a pretty good target for price action to run back to before we actually do start running for higher prices. So my thought process was we accumulated here. It makes sense to have our accumulation right here. Post macro, we're going to want to see price come down here into some sort of higher time frame fair value gap like this, taking out some sort of sell side as our manipulation to end up running higher. We had a initial breaker block right here. You can see we had this breaker that price ended up displacing and closing through, came back up right here and ended up rejecting lower. So yeah, so here's the breaker block right here. You can see right here we displaced all the way down through it, and then right here you can see we came back up and retested this breaker block. We didn't come up into the SIBI right here, which is okay, because if we're retesting this breaker, I'm okay with leaving this fair value gap unfilled. This is just showing super heavy displacement down. That was my first confirmation right here that we were going to go lower. So I was looking for a secondary entry of some sort. So if we run to the 3-minute here, there's actually this 3-minute inverse fair value gap, which you can see before we retraced. So we actually did close below here. So that was one confirmation, was this 3-minute inverse that we closed through. Price slowly retraced, and if you notice inside that 3-minute fair value gap or inverse fair value gap, we had a 1-minute fair value gap inside of this 1-minute order block right here, which is the mechanical entry model, which is the A+ entry model basically. So if you see a fair value gap inside of an order block, you always enter on that. You don't have to, of course. That's what I enter on. That's my go-to entry model there. Plus we're following order flow here with a pretty nice draw on liquidity. And then we had another entry opportunity right here, which I did end up scaling in. So reached up into this first initial SIBI, entered, and then we created another sort of, this was also an inverse actually. So we had this inverse value gap, which actually turned into a regular institutional order flow entry drill. I scaled into another contract right here, moving my stop to this recent high. Stop was right here. Second entry right here, and then I was originally targeting these lows down here because that was the pretty obvious draw, as well as if we reach into standard deviation here, we can see that range was right inside of our standard deviation. So 2 to 2.5 was right inside of our equilibrium or our discount fair value gap here we were looking for. So another reason why this would have been a high probability target. But I didn't actually end up leaving runners, and I got out earlier than I would have liked to. ES actually was SMTing with NQ and started to take the lows at the same time, or take macro lows at the same time we were taking internal range liquidity lows. Here was my trade right here originally. This was the trade protecting this high down to here. So entered another contract, so I'm filled about right here, stop to here. And then we have internal range liquidity. These were the lows that we were targeting, right? These are the macro lows. You can see, so 1048 low, 1048 low, this is what we were targeting. At the same time, that price right here is taking out this internal range liquidity. You can see ES right here is taking out macro liquidity. So I was concerned that price right here would end up SMTing. So we took out this low here, creating the sell side sweep. Then I was afraid that we would actually SMT with price on NQ in reverse higher. So I ended up managing my trade, and I got out my full position at this internal range liquidity. 1.5 risk to reward after all of the managing. Still 750 in profit, so I'm really not too upset with it. That's a pretty good, a little over 20 handles for profit, so with 2 contracts. So can't really be mad about that. Even though I did not leave a runner, which is usually my strategy, which I should have left runners realistically. I'm okay with the profit. So that was the only trade we took today. One little short in AM session. So let me get more into some analysis about where I think we're gonna be looking for price within this next week here. So if we look at the higher time frames on NQ here, our Monday reversal swing here, we have a nice 3.5 to 4 standard deviation range inside of this daily range equilibrium fair value gap. This fair value gap is our equilibrium range. You can see the OTE right here. Here's OTE, here's equilibrium. This fair value gap is inside equilibrium. We have tapped into equilibrium right now, and we should be seeing a reversal here soon. And I have a few reasons for that. First of all, our reversal swing standard deviation, we reached all the way to our final standard deviation reversal point. So that's why I'm thinking high probability chance that we reverse here. Second of all, obviously daily range equilibrium fair value gap. Look at these equal highs. That is a really high probability target here, a really nice draw on liquidity. And honestly, all of this accumulation on here is not good enough for me as a reversal swing to start projecting the new standard deviation for the rest of the week. So what I would really honestly like to see from London tonight is maybe a tap down here and then reverse up. Maybe manipulate some of these equal lows that we've created during price action today. Maybe looking for something like this where our equal high is, right inside of a standard deviation range. Something of that nature. We're just gonna have to see what price delivers for us tonight. Also, if we go up into these higher time frames here and we look at price, we have this really nice daily fair value gap right here that is conveniently inside of a weekly fair value gap. I have a fair value gap right under it that's inside of it. But this current fair value gap is these highs right here that we are actually on. Oh, these highs at the bottom of this daily fair value gap are actually S&T highs here. So if we look at this price line right here from 2 a.m. on July 18th, we left these highs untouched. If we run over here to ES, these highs right here, July 18th, we've already ran out these highs. So we have a very high time frame S&T here, and I would expect to see price come up and clear out this S&T. 1, 2, 3, 4 confluences already that we're going to see higher prices this week. I'll give you some more right here. Let's hop over to DXY. So if we look here at the daily chart on DXY, we've been taking a hella sell side, so it looks like we might be getting some sort of reversal here, right? I think we are running down here for this low because if we look here at the weekly chart, we can see we had this weekly bullish fair value gap right here that we absolutely just tanked through, right? We just tanked right through it. And if you've been looking at the price lately, we've actually come up, retested that inverse fair value gap now, and I expect us to run lower off it, just as we have displaced right here. Zooming down into the 4-hour time frame, from our reversal swing back on our retracement, you can see this 4-hour reversal swing right here, the 2 to 2.5 reaccumulation standard deviation range is right in line with that weekly inverse fair value gap. So another reason that we are going to come back to it, potentially reverse and run for lower prices. And as you know, DXY works inversely with indexes, so whenever DXY is going lower, indexes are going higher. So we have probably about 6 or 7 confluences here that are showing us higher prices for the rest of this week. Not to mention on the indexes higher time frames, on the 3-month and the 1-month reversal swings here, our 3-month reversal standard deviation and our 1-month reversal standard deviation actually line up perfectly, almost to the tick that they line up. So that's all I have for my recap and my analysis for us this week. Hopefully you learned something from this. If you did, drop a like, drop a comment, make sure you hit that subscribe button. I'll be posting recaps like this all the time, so please go check out my other socials in my bio, and I'll see you guys on the next one.